All right, everyone. So I'm going to go over some opportunities. Today. All right. So here's and see which ones worked, which ones didn't work, and all of that. All right. So the first market is crude. Then I think we'll go to gold and ES. So here's the opportunity. Basically, you had a sell and the test of a breakdown right here. See that? You have a break where it says BD is a breakdown because it took out this low. So you have a retest here. So obviously, when you have a retest, there's going to be a reaction. Okay. Also, you're going to note, if you take close, you see this wick? This is demand failure. So those shorts are stuck and they will want to get out, break even. Right here, you see this wick on this, the 3? So that's the breakdown, test of the breakdown. And now we're going sideways. I'm not sure if we're absorbing to go higher or there's some distributive action to go lower. I don't know. All I know is that the opportunity presents itself, and we're going to take a look at that. Then we'll take a look at the counter trend move, and then the move with trend again. So where was I? Okay. And what happened? All right. So let's see here. All right. So basically, was here. I forgot where this was. Okay, yeah, this was the breakdown right here. Right here is the morning in the move in the morning, right? So the market basically comes back here and then it breaks right here. So this is a base and it's a break. So idea is basically cause and effect. You have a cause and then you have effect and a break and continuation. Now this would have worked perfectly, but the problem was this guy right here. Otherwise, the chances for a downtrend is quite high. So after this breakdown right here, you see the red volume? You see high volume over there? What's that saying? It's saying selling. So it's selling, it retested the same high volume print, and it went down and it took out this low. So I was very comfortable, but what happened was at the support level, these buyers came in out of nowhere at the support level. But I guess, they basically came out of nowhere because it was ready to go down. But they came and they defended support and then rallied the counter trend, rallied it back up. So the trend, we know immediate trend is down, as you can see here on the Renko, right? And then it tested, gave the sell, gave the retest, made the lower low, but these guys came in and said, not yet. Buyers came in with a pretty big print. That's 5,100 contracts at support, which is more than the 4,600 at support, which is more than the 4,000 here at resistance that initiated the break. So they came in and they held the market. And after that, basically broke, right? So, so idea is, okay, if they want to break it and they want to pull back, you get in on the retest, right? Only problem is that it's a counter trend move. So with a counter trend move, it gets really, it gets challenging because counter trend have two problems. One, they have low reward, and two, the probability of success also diminishes. And a lot of times they're just going back to a support or resistance level. They're not going to give you a big move. So that's exactly what happened. Anyway, so this guy, he caused the, the break here. Came back, test. What happened? Demand right there. That's the demand. And I went through the study. I'll show you yesterday's study, which it kind of, you're already prepared for something like this. You know what I mean? Because remember, when you have the big prints at the lows or the end of the move or the bottom of the column, it's demand. When it's at the top of the column, it's supply. At the bottom of the column, it's demand, it's going up. At the bottom of the column, it's demand, or very close to the bottom of the column. At the top of the column, it's supply. The only time that changes is when you're taking out and breaking a low. Then, even though it's at the bottom, it could be absorption to break through. Anyway, so this is demand. I know it's demand. Why? Rally, the green bar, you have 101 and then 51. So 151 buying, pulls back 88, pretty heavy, goes down 39, 40, 49, hinging, small lack of activity. Increase in activity, that increase in activity is because of demand coming in here. And that demand built the base, broke it out, took it up here. Now, as price goes up here, right, to resistance after that breakout, you don't want to get in. And the reason is, first of all, it's counter trend. Second is this guy right here. That 59 print is the biggest print. 1, 2, 3, 4. Out of those big money prints, that's the biggest. You know why? They're selling resistance. That's why. And then from that, you have selling. You have the bar going down, so it has to be selling. So this is supply coming in, pressing the market down. So now we're going to see if this market breaks and takes out all of these lows. All right, that's what I'm looking to see if that happens, because it's in a very precarious position going through support and resistance at that resistance level already, and has a chance of really breaking hard. So we'll see if it does that. The other points I want to make is that not every move, even with trend or is going to work. This move here, was it this one? No, it was this one. This is a with trend move, but it only pulled back and went over here. It didn't work in terms of continuing down. So even with the trend trades, some of them are going to work, some of them not going to work. You cannot forecast that this guy is going to step in, the 51. You don't know. You cannot forecast that they're going to step in. You don't know if he's going to step in. And then run it the other way to create a counter trend move back to resistance, where supply once again comes in. So anyway, we'll see if this thing works or not. Since that print is quite large, chances are high. It just has to break this. I could take out all of this. Anyway, otherwise they'll absorb and take it higher. That's also a possibility. So you don't really know. It's just very dynamic, and you have to know how to deal with that environment. A dynamic, changing, probabilistic environment is what makes this hard, because expectations on individual trades are totally uncertain, but expectations on a series of trades, trend trades, you're going to make capital, cash, money, etc., just because the reward is much bigger than the risk. Even though the numbers may be even, the trend trades just give much more reward. And counter trend trades, as you can see, all they do is rally, pull back, test, go to resistance. It's a very small move. Take a look at this. It's usually counter trend is about 1.5 R. 1, 2, 3, 1, 2, 3, 4, 5. So in this case, 1.66 R. It's a very small amount of reward relative to the risk. And then it gets smashed down. So now I want to see if they take out this. If they take out this, oh boy, goodbye. It's puke fest. Sell, 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 take out the lows, and goes. All right, let's, okay, so on crude oil, you had, let's see, this I didn't trade. This was too late at night. This one, yes. This one, yes, as well. So this was the wick trend, one counter trend opportunity, one break even with trend opportunity, and one counter trend opportunity. So you have to know to get out at resistance. Anyway, let's move to the next market. All right, so we'll just say that the trend trade here, we'll call it a break even. Is it break even? Let me just make sure. Boom. Yeah, it's a break even. So we'll just say it's a break even. All right, let's move to the next market. All right, so here's going to get a little more interesting. This is the gold market. Remember, I'm tracking the trend and counter trend on a daily basis to show you the opportunities and prove to you what works, what doesn't, based on real market stuff. All right, so we'll see. We know that gold downtrend, right? Test, down, retest, down, another one. So trend is down. And this was overnight, so this doesn't count. This is like overnight. You obviously don't get into that. Here though was the opportunity. Why? Because you have a base, you have a breakout, you have high volume distribution prints. It's a no-brainer. So where was the opportunity? After it went up, here you have distribution. This whole thing is distribution. And it breaks and takes the low. So now you have that retest. The retest is right here against the 48s, and it goes down. Simple as that. Now, I'm not sure why it hasn't broken through lower yet, but I mean, I don't know. But this is a trend trade because the market is in a downtrend, and this relative to the time frame or relative to this Renko, because I don't want to trade too high time frame. There's no point. This is the right settings for this type of intraday work. So this is a downtrend, pullback, retest, goes down, retest here, and you get the sell with distribution, get the test, and goes down. It goes exactly where you expect it, which is right here. Why? Because of this print holds, yeah, and then it goes down. I'm surprised that it didn't break. I thought it would have broken by now. But anyway, that's the wood trend trade. Okay. So score 1 for gold. So gold trend trade works. And now we'll take a look at the ES. So ES had some trend and of course counter trend moves. So ES does that. You just have to know which ones to take. And remember, counter trend, the probability diminishes, and the basically it's a 1.5 R. On average, you're going to get 1.5 R. You're not even going to get 3 R, which means you're not going to get sometimes you get 2 R, but generally it's 1.5 R. All right, so we see here, market is going down. On the ES, the market is going down. You have failure, 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 failure. It just goes down and down. I mean, there's no point to... Right, so you already know in mind that you want to take sells. So, what time? Not sure. 3:30. Yeah, anything that's overnight like that, just I don't even count those signals because those times have no liquidity. So you just forget about that because they have no liquidity. any signal, any pressure, any buy sell always requires the quick participation. Anyway, so right here you have the move. You see how this looks. You have this move here. First, I want to point out, I was very, very tempted to take the long here. Very, very tempted to take the long, and I would have caught this bounce. 1, 2, 3, 4, 5, 6, and basically that's 2R. 1, 2, 3, 1, 2, 3, 4, 5, 6. Yeah, it's a 2R move, right? Very, very, very tempted to take this, but in the long run, it's the losing proposition. And then up here, what you have is distributive action. So you see all those wicks on the candle, and you take a look at this chart, and you're like, oh, okay, well, that's distribution. How do you know? High prints, and then the break. Surprisingly, it wasn't really that much selling on the break. So it's difficult to interpret, but I mean, I know it's could be ease of movement and that type of thing, but it broke nonetheless, and it was from the high, and when it took out this low, you knew, okay, time to get in and sell the pullbacks. This is not a spring, obviously, right? So the 2, 3, there you go. There's the entry. One second. Anyway, so it pulled back to that area right here. After the base breakout, you have the distribution base, and then it break out. And then you have the test, and after the test, the market continues to go down. All right, now it continues to go down, and then builds another base, and then breaks out. Breaks down, breaks out to the downside. All right. Now they gave a fake signal here, because there was some end of day covering. So this was the. Now, how do you know not to take it? You know not to take it because it's counter trend. Counter trend, if you take like 5 of them, you'll see the ones that work give you 1.5R, 2R, and the rest don't work. It's that simple. Why? Because counter trends are meant to be sold. Because counter trends are pullbacks. They're meant to be opportunities for, buying the bull pullback and selling the bear pullback. So it went down here. This was the first sell that was tested, working out really nice. Second sell, right? What happened here? You had this breakout, which just offered the test of the sell. The sell gave the sell signal, base breakout, went sideways, had the base breakout to the top side, does not take out the high, and gives a nice low sell, test of the sell opportunity, and then pukes. Okay? So you just have to understand what's going on. And by the way, there's another base breakout right here. So here you had a lot of sellers come in. Right here, 109. These are end of day daily traders or weekly, I don't know. These are end of day sellers right here. They came in on this. That's distribution right there. How you know all the overlapping bars, look at its position against the highs, goes up, overall trend is down. You get a feeling real quick that first of all, if you have a bullish perspective, you're going to see this as a bull pole and then flagging, right? So it's a matter of perspective as well. You might see, okay, this is a spring, or this is some effort. Oh, now it's a bull flag. Off of this, we're going to take out this liquidity high, and that liquidity high. Right? So if your perspective will shape how you view the market. If you're bearish, you know that there's an issue. You know that you're already getting ready for pullbacks to sell, right? If you're bullish, this is a reversal look, right? It has that look of a strong bull flag, pennant, whatever. but it's not. So that's why, you know, you need to see more than shapes and patterns and actually see the numbers and all of that and significant highs being broken. So over here, for example, if you're even if you're neutral, right? If you're neutral to this market and you're not bearish based on trend, perception of trend, or what you see as downtrend, even if you're neutral, what would happen is you'll see this big print and be like, what's that? And then you'll see this big print, and then you'll see this signal, and this will get you bullish. Why? Because it didn't break down and it get picked up, it didn't break down and it reversed. So this is bullish activity right here, right? But if you're bearish, you know that the bullish activity sets up pullbacks to sell. That sets up counter trends to sell. You know, and on the bullish side, what happens is when you have a market that does a rally up here, damn it. Anyway, so when it pulls back up here, it's going to show you very bearish signal, bearish behaviors, and you think that's a sell. And you're probably right, but it goes down very little, only for it to get reaccumulated to go higher. And that's what happens. All right, so bottom line, what worked? What worked is the trend with sells. Sells. Did the buys work? No. They either don't work or they gave very little reward and they fail. So let me see if I went over gold. I think I already went over this. So basically, out of the trend trades today, gold worked and the ES trend trade worked. The crude initial trend trade failed. Now I think there's another trend trade that's setting up, and we'll see how that is. But I mean, 2 out of 3 trend trades worked. 2 out of 3 trend trades worked. For the counter trend, we saw failure on the ES, and even crude. I shouldn't say. I should say that the crude one had a very small reward, very, very small reward. So, as expected. Okay, folks, I'm done. I'll try to do one study later today in the tape reading course, or whenever I have time. Take care. Bye.